Good afternoon, everyone, and welcome to today's Q&A webinar about supply chain resilience, post-COVID and Brexit, brought to you by the Institute of Export and International Trade in partnership with Bibby Financial Services. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. And thank you all for joining us today. We already have over 100 of you on the call with more to come, so a warm welcome to you all. If we can have the next slide, please. We have two great speakers today tackling this topic in Aman Gill, Head of Structuring at Bibby Financial Services, who's been with Bibby for 5 years in various trade finance roles. And Nicholas Blenkinsop is joining us for the first time. Nick is a customs consultant at the Institute of Export with 27 years of experience in the agricultural, oil and gas, food manufacturing and life science sectors. But before handing over to Nick and Aman, I'd like to run a quick poll on the next slide. And first poll today, again, just to find out a little bit more about you. We're asking you, have you had to change or adjust your supply chains due to COVID-19 or because of Brexit? The options here are yes, because of both, yes, because of Brexit, yes, due to COVID, yes, but for other reasons, and then none of the above. While you are answering that poll, just a couple of quick housekeeping notes. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. We hope to get a number of questions during the webinar, and we'll get to them mostly at the end, but also in between the presentations as well. Please do bear in mind that we have received a few questions in advance, but also please do take the opportunity to ask questions in the normal way. If you feel as though your question has not been answered at the end of the webinar, please do review our technical helpline or training and consultancy offerings, which we'll be talking about later on in the webinar. Secondly, you will be receiving access to today's slide pack and a recording of the webinar in a follow-up email we will be sending over the next day or so. So please do try to listen in carefully to today's presentation. But I'm just going to close the poll in a few seconds. I'll give you a mini countdown. 5, 4, 3, 2, 1. I'm just going to close that now and share the results. And so clearly COVID and Brexit have had an impact on many of your businesses, particularly Brexit. So 27% of you have just been impacted by Brexit, 29% of you being impacted by both. So I hope today's webinar is useful. Only 6% just due to COVID, and a third of you, just over a third of you, haven't been impacted by either. But this may be more out of interest, out of curiosity or education. But if we now move on to the next slide, to talk a little bit more about all of these issues, particularly around COVID and trade finance as well, I'm delighted to hand over to Aman. Over to you, Aman.
Thank you, Will. Good afternoon, everyone. So yeah, as my current role at Bibby is focused on corporate and trade underwriting, and as Will mentioned, I've been involved in structuring facilities for our trade finance clients at Bibby for a number of years now. So I'm going to talk about some of the feedback and kind of our first-hand experiences with clients during COVID and now as we've kind of moved through Brexit. Also, if we can move on to the next slide, please. Thank you. So in terms of obviously what we've experienced quite recently with the global shipping crisis that's occurred, there's been an imbalance of containers globally, which has really been the impact of overstock in some regions and a shortage in others, which has kind of had a knock-on impact with congestion at port. So what we've seen is kind of billions of dollars of cargo per annum moving from Asia, and the blockage of the Suez Canal has kind of highlighted how fragile the global shipping really is. Partly down to kind of questionable economics of shipping. Some of the big shipping companies out there really do dominate the market space, and clients experience kind of 4 times the rates that they had been historically paying for shipping in January 21. And in focusing on the shipping companies in particular, I mean, they're kind of very highly leveraged with their kind of debt outweighing their earnings by over 10 times. So it kind of does act as a bit of a a deterrent to new entrants kind of entering into the shipping industry, which has left kind of a little little tolerance versus when shifts in demands do kind of occur, which has meant it's difficult to keep for clients to kind of plan demand for their product and source and procure products, particularly through COVID and now more recently due to Brexit. There's been a lack of government investment globally, which is not something that's particularly new, but it's kind of exacerbated the situation with COVID and Brexit. And in terms of globalization, I think supply chain strategists are concentrating more now on how regional and local supply chains offer more resilience against potential shocks in the current uncertain climate. Next slide, please. So coming on to COVID, often referred to as the black swan event due to the impact that it's had on the global economies and supply chains in particular. And it really has highlighted the vulnerability of businesses due to potentially not kind of optimizing supply chains, managing inventory levels, or maximising asset utilisation. So it's highlighted how interconnected and interdependent the world really is. The knock-on impact of that has been that our clients have seen delayed and cancelled orders, which has required them to increase their stock holding, requiring them to tie up cash in said stock holding and cause a strain on their cash flow. Availability of company searches and credit insurance limits has impacted both from a customer or debtor perspective and also from a supplier perspective. And that's really been down to two kind of main factors. One has been lack of information available and partly lack of responsiveness initially due to kind of a lot of the service providers adapting to work from home. And we have seen kind of over the last year or so government support for credit insured limits. It was initially delayed in terms of being kind of facilitated and put out into the market, but was very much a short-term situation, and has now kind of tailed off a little bit. As we expected, that there have been kind of winners as well as losers, and the growth sectors during COVID-19 were predominantly FMCG, as in fast-moving consumer goods, personal protective equipment, and ICT. And that's kind of been off the back of high demand from those working from home to those social distancing and those kind of operating in healthcare settings. So it did create opportunities for existing traders, but also opportunities for new market entrants to enter, often for with the potential for high margins, but a significantly increased risk due to potentially inexperienced new market entrants. Next slide, please. Moving on to diversification of supply chains. Viability of manufacturers and suppliers, particularly due to cancelled orders and failures along the supply chain when COVID in particular hit, has been a cause for concern for some clients. Changing supplier payments terms has also kind of been an impact of that, where we've seen a shift from open account trade payment terms and potentially cash against shipping documents move across the payment scale to suppliers insisting on deposits and other forms of pre-shipment finance, such as either 100% pro forma payments or letters of credit being offered, which is interesting because we had seen a decline historically with letters of credit due to potentially their cost and the administrative nature of letters of credit. But we've seen particularly recently an increase in the demand for letters of credit. An example of that would be garment manufacturers sourcing apparel from countries like Bangladesh, Pakistan, India. The reliance on technology, that's both in terms of supply chain as stakeholders within the supply chain look to digitalise their offering and reduce the paperwork and manual processes. But also, as mentioned earlier, people working from home and the increase in e-commerce, where there's been an increase in over 200% of payments put through global merchants last year versus the year before. Further digitalisation is required, and I think the pace of that is picking up and will continue to pick up as a result of COVID. And in terms of the impact of Brexit, I think that is something that Nicholas will come on to in more detail in his slides. Moving on to the next slide, please. This kind of infographic provides an example of the financing that's available to our clients, and obviously, as Will mentioned, the example, the slides will be sent out, but I just wanted to run through how we can help. So kind of right at the start of the supplier order cycle, there is a client that needs to either pay their supplier or issue a letter of credit. Kind of that's day one. So we can either provide deposit payments, 100% pre-shipment payments, or letters of credit through the bank-to-bank system to our client suppliers. The supplier would then produce the goods, ship the goods, and provide shipping documents against which Bibby would pay the supplier directly. Moving on to when the goods then eventually, once they'd been in transit, would arrive at UK port or potentially directly at the port of the debtor destination, Bibby can pay the duty, VAT and freight relating to those goods. And then clients have two options. One is kind of on an import loan basis to repay the liability, or utilise our invoice finance facility, whereby we would then advance funds against the invoices raised to the end customers, and then ultimately the debtors would pay those invoices, which can be on a confidential or a disclosed basis, with or without bad debt protection. And the kind of the figures at the bottom kind of illustrate quite nicely the typical kind of fees that would be applicable in this example transaction. Next slide, please. So coming on to supply chain resilience, businesses should map out their supply chain cycles by undertaking an analysis so that they can ensure that the supply chain is as responsive, competent and flexible as possible to quickly manage their supply chain on a regular basis. The starting point would be to establish the supply chain cycles and design a supply chain strategy plan, and then undertake supply chain operations accordingly. Supply chain strategies and analysis are not simply just about logistics, but also focusing on the sourcing, processing and delivery of goods to end customers, rather than simply moving and storing goods. And to do that, the key components to consider are any contracts with suppliers and or end customers, the Incoterms applicable with suppliers and end or customers, transport methods used, the processing and consolidation, where that takes place and for how long, and ultimately that is all combined to create a supply chain strategy for the organisation. Thank you, Will, and that's the end of my slides.
Thanks, Aman. If we move on to the next slide, yeah, thanks for really good, really interesting stuff, particularly around. I hadn't realised kind of letters of credit had made a comeback, so that's interesting to hear, and I'm sure we'll have questions on that later on. It's going to launch our second poll for today. This is going to ask you, has your business accessed trade finance or an import loan facility recently? You can select all that apply out of yes since Brexit, yes since the start of the pandemic, yes but not since the pandemic, and no. Just while people are answering that, Aman, we've already had a couple of questions come through. First one is from Cecilia, and this touches on letters of credit points you were making earlier, but how have payment methods changed in general kind of during the last year of the pandemic, and maybe also as a result of Brexit?
Yeah, as mentioned earlier, there's certainly been a switch from open account payment terms and even cash against documents where potentially there was 100% payment on shipment of goods to more pro forma payment methods, and letters of credit are certainly one of those. And it really has been the impact from cancelled orders and manufacturers potentially being kind of burnt with the cost of components, materials, having to shut down and diversify their kind of supply chain towards other products. So it's kind of an obvious way is for letters of credit, whereby suppliers are potentially discounting the letters of credit for their benefit as kind of a risk mitigation. And they've got then the confidence that whatever they're producing, they will actually get paid for, and they can ship the goods and get paid. So that's certainly something that we're seeing, like I said, an increased demand for as suppliers are renegotiating their contract terms with their customers.
Really interesting. And we've had another question come through from Robert, who's asked, will COVID-19 result in more onshoring of supply chains?
Yeah, I think we've already seen an element of it, and it continues to kind of play out. So linked with the issues with suppliers in the Far East, China, and even Europe, we're already seeing now that the supply chain has kind of there has been a bit of a shift to UK PLC. I mean, examples have been 3D printers diversifying their kind of production to kind of PPE equipment, producing kind of face visors, etc. It's been a result of not only just raw materials and components, but also all the shipping delays and restrictions that we've seen, and containers potentially laying empty in some places and kind of having blockages in others. So transport has kind of played a big part in that, and as has changing consumer demand. I mean, essential goods were being stockpiled at one point, and Brexit's kind of changed that slightly, in that we're seeing clients operate kind of locally in the EU via countries like France, Germany, Northern Ireland. That's kind of been a new trend where they're kind of setting up local operations as a result of that. And I think in terms of not just us onshoring, but countries like Germany, and France also producing, moving into more kind of electric car battery manufacturing facilities to reduce the reliance on Asia. That's kind of been a recent trend as well.
It's really interesting. I hadn't really thought about the 3D printing point. It still seems futuristic to me, but I suppose it probably will come in as more of a thing in the next few years. And obviously there's the environmental aspect to all of this as well, in terms of trying to reduce some of the distance
The
times.
carbon footprint, absolutely.
Well, thanks, man. I hope that's been a useful answer, Robert, and hope Cecilia, that was useful beforehand. Just to quickly close that poll. This is quite interesting. So, a vast majority of you, 90%, haven't accessed trade finance over the last, well, at all. But well, about 15% of you have, and there's a kind of a different range of kind of when you have as well. But really interesting response. So thank you everyone for answering that poll. But now without any further ado, I'd like to now hand over to Nicholas on the next slide to talk about some of the more customs aspects of trade, of supply chains last year, including a little bit on COVID, but also Brexit as well. Over to you, Nick.
Yes, good afternoon, everyone, and welcome to today's webinar. Today, we're going to look at some of the impacts to supply chains caused by COVID-19 and Brexit, and what we've been seeing with regards to practices carried out by some businesses, although we need to stress that the practices taken varies depending on the type of business and the market sectors they're in. When we think about supply chains, we need to think about all the elements such as the purchasing, stock management, stock holding, compliance, customs, customers and sales, logistics, etc., depending again on the nature of the business. So a number of factors have to be considered here. The principles don't really change, but what we're seeing is the importance to have robust and alternative supply chains. Could we have the next slide, please, Will? And the next one, please. Okay. So whilst these slides do not provide an exhaustive list, they do give you a flavour for some of the issues facing supply chains today. Reports are showing some traders have been left with a surplus of goods for which their warehouses are struggling to handle. It's reported that there is £10 billion worth of clothing could be piled up in warehouses as demand for those products slumps as a consequence of the virus outbreak. This is mainly due to things like orders placed and dispatched before the lockdown of non-essential goods, which have continued to arrive at ports and cause problems for warehouses, which block the flow of essential goods, such as food and pharmaceuticals, whereby warehouses handling these essential supplies struggle to deal with the massive spike in demand. So clearly moving forward, careful planning will be required to traders to avoid or mitigate for this type of outcome. We've seen a lot of shipping costs rising dramatically, as Aman touched on. It's going up by at least 300%, and it shows no signs of slowing down. Shipping companies report record business. Some examples are a 40-foot container from Jebel Ali to London Gateway is up from $800 back in October 2020 to $3,600 today. Containers from Shanghai to Felixstowe are up from $1,800 back in November 2020 to $7,000 today, and they did actually go to $10,000 in January 2021. So, shipping's a bit crazy at the moment, we're afraid to say, and this is having a big impact on the bottom line, as these additional costs, as well as the congestion associated costs, as things such as key rent and demurrage, are passed to the importers, which is resulting in thousands of pounds of additional costs, which they didn't expect to have to undertake and take off their bottom line. There is a bit of better news in the shipping industry, though, in as much as the number of blank sailings is reducing, and reports are showing that in the first quarter of 2021, they're down to 2%, and if you consider they were at 20% in February 2020, that's a big improvement. For those of you that don't know what blank sailings are, this is when you book a vessel with a shipping company. They take everything from you, and then the vessel doesn't go, and then it just goes in the stack, and you have to wait until the shipping company eventually ships your goods, which can result in huge delays. Social distancing issues and absenteeism have been big contributing factors, and this has triggered a rise in the robotics technology in warehouses, where these automated pick and place systems have less reliance on staffing levels. As a result, it's reported that demand for robotic systems is set to quadruple by 2023 as businesses try to make their operations more pandemic proof. Can we have the next slide, please? So Brexit continues to affect supply chains as businesses grapple with the new legislation for documentation and customs requirements as a result of the border operating model, which came into force after the UK left the EU single market. Now that the free movement of goods is removed, traders have to treat movements between GB and EU as imports and exports, although there are some easements from the government, such as the implementation of the import process in stages and the relaxation for guarantees for duty deferments and some custom special procedures to allow the traders time to come to terms with the new procedures. The first quarter has thrown up some interesting statistics as demonstrated here for uncertain trade flows, where the EU, which shows that online deliveries have struggled and have dropped by 50.7% in the first quarter of 21. Although exports are showing to have improved with a rebound of 46.6% following January's slump of 42%. So we can see as we progress, certain sectors will benefit more than others, but as businesses get used to the procedures of the online deliveries may recover and trade may normalize. So it'll be interesting to see how these figures bottom out as time goes on. Can we have the next slide, please? Another aspect of Brexit is the Northern Ireland Protocol, which means that goods moving between GB and Northern Ireland now require special procedures such as ENS safety and security, as well as customs declarations. Many traders will have no previous knowledge of this, but they can get assistance through the Trader Support Service. While the system beds in and traders get used to the new requirements, we have seen a movement in traditional trade flows where businesses look for the path of least resistance to avoid the existing routes of moving goods from the EU to the island of Ireland via the GB land bridge. We are now seeing traders and hauliers moving directly from the EU, where movements are made from France to Ireland and then from there to Northern Ireland, making use of the unfettered access that is available to them. Stats are supporting this and showing there is a 49% fall in freight moving between Ireland and GB, but there is a 102% increase in the number of sailings from Irish ports to France. Moving goods in this way, it does take longer and it is more expensive, although these stats may settle down as time goes by and the traders get more and more used to the requirements. But at the moment, this is the trends we're seeing. Can we have the next slide, please? I'm conscious of time, so I won't go through all of these, but some of the key points are the trade facilitation agreements and generalized systems of preferences, or GSP. So businesses should consider trade agreements with other countries and GSP arrangements whereby businesses can reduce or eliminate their import duty and VAT, especially if they're going to be making use of preferential origin that exists within those free trade agreements and the customs special procedures, which we'll mention in more detail in the next slide. Track and traceability. So this software can be provided by your logistics provider, or you can have your own system, but it will be vital for businesses to see where their goods are located in the supply chain. If you trade in goods and not just goods and services, to show where they are. Clear visibility and stakeholder engagement is going to be key in planning and knowing where your goods are at every stage, and to facilitate mitigation and for assisting traders to take alternative actions to get their goods delivered on time. The use of 3PL and 4PL can be beneficial, and it can reduce your costs if you want to make use or more use of your forwarders or specialized companies that can offer this. Can we have the next slide, please? So then we come to custom special procedures. These can be very useful for businesses. These supply chain efficiencies that we've seen in the post-transition period is in these increased number of companies that are applying for authorizations for custom special procedures, such as inward processing relief or customs warehouses, which enables you to suspend or eliminate the need for paying import duty and VAT on goods you import and re-export. And this can be important for the supply chain, as we mentioned earlier, because this will come off the bottom line and make companies more profitable. And also, these authorizations no longer require bank guarantees unless you are a high-risk trader. Can we have the next slide, please? This is not an exhaustive list, although implementing best practices, principles into your business models and engaging in stakeholder management will go a long way to helping businesses to avoid any surprises and enable them to mitigate for any risk as they move their goods through the supply chain. That's it from me. I'm going to pass you back to Will now.
Thanks, Nick. Really interesting that. We had a comment in just from Stacey, actually, who said 35,000 TEU have been removed from the market next week in blank sailings. So they are still happening, and the advice to importers is to book early. Thanks, Stacey. That's a really good comment. Sorry, a really good comment. So thank you for putting that in. If we move to the next slide, as with the end of Aman's presentation, I'm just going to do another poll now, and I'll ask Nicholas a couple of questions. During this is this is a two-parter. This is actually a question we're taking back to government. So this is your chance to feed back to government directly. We're asking which of these are the most important barriers to your company doing business overseas: bureaucracy, logistics, access to finance, access to credit, access to credit insurance and lack of language skills are your options there. You can pick 3, and we'll be putting forward 5 further options in a minute. While you're answering that question, vote. Nick, a couple of questions in for you already. We've had one from Martin, who's asked, we've only ever traded with the EU till now. If we wanted to diversify our supply chains, what steps would we need to take?
It's an interesting question. You need to research the products and the markets that you want to enter. There's a lot of things you need to do, but things that come to mind is you need to make an export business plan, many things to consider, SWOT analysis, packaging and labeling, laws, licensing, compliance, method of market entry. Are you going to go directly, or are you going to go through an agent, or are you going to set up an entity overseas? You can participate at exhibitions, trade fairs. You can go on a fact-finding mission, which sometimes gets support from the government. You'd have to consider the good old 4 Ps, product, price, promotion, and place, Incoterms, just to name a few things. Chances are there are a lot of companies who will have good export market opportunities open up for them. But what's really important is you need to go into it with your eyes open and do the right amount of preparation and planning before you take that step.
Really good advice. I just don't know how long we're doing these webinars for, but planning and research is always the top suggestion when it comes to preparing to export. So hope that's been a useful answer. I'm just going to close this first part of the poll and then ask the second 5 options. So these are now finding trustworthy partners and customers, adaptation to post-Brexit circumstances, attitudes to UK business, corruption, and then competitive environment in overseas markets. Another question for Nick, just following on from your presentation, following on from your point actually about customs procedures. This is from Karen. How does one go about using or applying for customs warehousing? What criteria are there to apply?
Okay. Well, an example of the criteria could be you want to import a product and then you want to re-export it. So for customs warehousing, what you could do, you could import the product into a customs warehouse and you could suspend the import duty and the VAT. You have to be careful because customs warehouses, you only have minimal amounts of handling, but what you could do is you could repack it for distribution so that when you send it back out to the EU or you export it out to the EU, the import duty and the VAT liability is discharged by the creation of the export declaration in GB. So that's an example of how you could use it. But companies need to consider how many imports and exports they're going to be making versus the cost to run a customs warehouse or using their freight forwarder. So you have to think very carefully about it. And you should read the guidance on the UK Gov websites carefully, as there are different customs special procedures for different aspects of trade. So you need to check the one which is right for you. And for a customs warehouse, you may require a comprehensive customs guarantee, but you would be informed of that when you made your application to HMRC.
Thanks, Nick. And just a quick word that we do have, the Institute does offer consultancy around procedures like customs warehousing. So if you need more information, do have a look at the website afterwards for more information. I'm just going to quickly close that poll and just showing you the results from that double bidder. So the first part, quite a lot, well, managing bureaucracy is very much the top issue there, 81%, perhaps unsurprising. That's followed by managing logistics at 70%. If I show the second part of that question, and then 2/3 of you saying adapting to post-Brexit circumstances, again, perhaps not surprising. That's followed by finding trustworthy partners and customers, 59%, and then competitive environment in overseas markets follows there. So we move to the next slide, just to remind everyone that we are going to now go answer some of your questions. So please feel free to ask away, anything to do with supply chains or kind of further international trade, trade finance, Brexit. We can answer your questions over the next 10 to 15 minutes or so. Aman, a question for you. This comes from Lucy, who says, have you seen your clients facing orders being cancelled because of circumstances over the last year of Brexit and COVID? And what do you suggest companies do in such a situation?
I will. Yeah, we certainly have seen that, and what clients have tended to do is really communication's been key. So communication with the suppliers and or end customers of their products. We can also help with that in terms of verifying orders and doing our due diligence, as well as the client doing their due diligence on the suppliers. I guess in terms of when orders have been cancelled, it kind of depends on what the reason is. If it's orders being cancelled by their customers, they've looked at kind of alternative exit routes for them to sell the product, as long as it's not it's fairly standardized and isn't kind of bespoke to the end customers. Otherwise, kind of focusing on only kind of undertaking the manufacturer procurement of goods when they're pre-sold themselves. So they're relying on an order from their end customer and then place an order with the supply chain to kind of replicate that. So they're kind of reducing the risk of having unsold product, and with it being so difficult at the moment to kind of forecast demand, particularly in certain sectors like retail space, for example, unless clients have been supplying into online B2C merchants, supplying into retail chains on the high street has taken a massive dive. So
Really interesting. Nick, anything to add to that one? I know you've got some interest in this area as well.
No, I think he pretty much said it all. There's so many variables that can affect it. It's just you could go on forever, unfortunately.
Okay, well, I hope that's been useful. Thank you for the question, Lucy. A question this will be for you, Nick. This is from Jutta, who asks, how can SMEs with a lack of experience who have traded only with the EU so far adjust to the new requirements around trading customs?
It depends really on the direction the company wants to take, whereby if it decides to try and do everything in-house or make use of an intermediary such as a forwarder or a customs broker, there's plenty of opportunities for traders to get grants and training to help themselves to understand how to do it. So I would suggest that they read the guidance, look at the training that's available, and then have a sit down and work out how they plan to go ahead. Obviously, a smaller company that doesn't have so many imports and exports would be more likely to work with a freight forwarder. But if you're going to have substantial shipments and movements and you've got a bigger plan, then certainly worth considering applying for customs special procedures and looking at the training to make sure you're up to date with what's available.
Thanks, Nick. Another question, I think, for you, Nick, a question from Dr. Anand, who asked, how do you see the EU GB cross-border LTL or groupage sector shaping up over the next 12 months? A speculative one, but yeah, any thoughts?
Well, yeah, we've already seen the changes in direction of the existing traditional movements within the EU, where people are now bypassing and going direct within EU. So I can see a repeat of this. Businesses tend to take the path of least resistance. So that's probably going to carry on until they start to grips with the legislation. But it may be that some routes decline and others they get the benefit of that. So we may see some changes to historical routes with regards to other and innovative ways that traders are finding and hauliers are finding to move those goods.
Thanks, Nick. I've just had a question in from Sarah, who's asked around currency. So she's saying that obviously currency has fluctuated a lot during the pandemic. At the start of it, obviously the pound struggled a lot, but recently it's been going up due to the vaccine rollout. How would you suggest to mitigate against prices or prices or margins changing because of currency fluctuations? And that would be for Aman.
Well, the two kind of I guess options to clients are, one is potentially to naturally hedge the currency. So if they're buying in dollars, selling in dollars, works particularly well if they're kind of importing and directly exporting to certain regions. But other than that, it would be to have a foreign exchange policy and strategy, and part of that would be potentially, at the moment we've got some clients that because of the volatility are choosing to trade in FX on a spot basis, kind of on a daily basis, but others are kind of choosing to take out forward contracts, fix the kind of rates and lock in the currency exchange rate so that they have got the certainty of locking in the margin. So that can be a particularly kind of sensible way to do it. But obviously, once you fix in, you don't get the benefit of the upside, but then you kind of fixed in from any further downside.
Thanks, man. I hope that's helpful. So we had a really interesting question from Christian, which I think probably go to both of you, but I'll begin this with Aman. Christian said, with the pandemic affecting a shift in consumer demands, i.e. consumers increasingly getting by and making do with what they have, is there a risk that traders won't be able to clear their backlog of stocks due to needing to keep their sales costs high, i.e. to cover the increased costs of shipping and customs? A fair bit to unpack there, but yeah, Aman, any thoughts on that?
I mean, there is a danger, in terms of kind of when reviewing clients and prospective clients' financial accounts. It's quite noticeable that there's a significant amount of stock holding at the moment, particularly with demand impacted and kind of the last year or so, kind of us being either locked down or under various restrictions globally. So there definitely has been an increase in stock holding, and absolutely, the cost of the cost of goods and shipping, as Nicholas kind of illustrated earlier, that's all impacting and reducing potential margin. So I think it's a kind of a case of timing, and those clients that can certainly kind of mothball stock are choosing to do so and waiting for things to open up again. And there are others that are kind of choosing to discount stock, release it so that they can kind of free up some cash flow. They're kind of the off the cuff kind of options. And I guess a final one would be to consider potentially a stock finance facility, whereby, similar to utilising an invoice finance facility to release a percentage against your unpaid invoices, or a trade finance facility to pay directly to suppliers for the import cycle, potentially releasing kind of value as a percentage against the stock that you hold, maybe an option.
Thanks, man. That's a lot to unpack and a lot of information there. I mean, Nick, anything to add? It's such a huge question. Any additions?
Yeah, it's an interesting question, and there's going to be a lot of traders out there that are going to be suffering. I gave the example before of £10 billion worth of stock where it's sitting in the warehouse. I mean, this was clothing, I believe. But imagine the traders that have got stock that's got a shelf life. So they're going to be under huge pressure to move that stock and sell it. So yeah, the planning is key to try to avoid repeats of this. But in some cases, I guess traders have just had to stick or twist. So they've stockpiled. In some cases, it's worked out for them. Some cases, it hasn't.
Great, thanks, guys. We'll do 2 to 3 more questions. It's billed as a 45-minute webinar, but I believe both our speakers have a bit more time they can spare us. So I'll do a few more questions. First one from Nicola, who's asked, have export shipping costs increased by a similar amount to import shipping costs? In terms of the prices you quoted earlier, I believe that'd be Nick. I mean, would there be a difference between export and import shipping costs?
They have increased, but there's always been a difference whereby export costs for shipping are usually cheaper than import costs for shipping. This is to do with the balance of trade. So of course, when you have a deficit, the country always wants to export and promote export. So the shipping costs are usually cheaper to export than it is to import. But ultimately, at the moment, if you are a warehouse, a freight forwarder, a broker, you're in a very good position because, you know, we're hearing about all kinds of cost increases which they're charging. And of course, you know, they're in a position to do that. So unfortunate for the traders, but yes, the costs are going up, but not on parity, but they are going up exponentially, and it's becoming very expensive to be doing international trade at the moment.
Just had a comment in from Stacey. Was it Stacey who commented earlier? I can't remember now. But again, saying also have been an increased increases. It's not been on the scale that we've seen for imports. So very much backing up what you're saying. But Nicholas, thank you, Stacey, for the comment. A couple of questions on customs procedures, actually, if we can do these broadly quickly, because we do have other webinars we've done on customs procedures. But Kenneth has asked, what is the general feedback on how easy it is to obtain a customs special procedure, such as inward processing? Our experience in Scotland is that it is incredibly difficult and takes a considerable length of time.
Yeah, it isn't easy. And if it was, I guess everybody would be doing it, but you have to follow strict compliance. So, you know, once you get given a customs authorization, you know, you've got a huge element of trust on your shoulders. HMRC will expect you to adhere to all of the things that they ask for. You're going to have to keep records depending on which customs special procedure you go for. There are a number of them, like inward processing relief, outward processing relief. So again, yeah, it does take a long time. And at the moment, because more companies are applying for these special processes, the actual turnaround time is going up as well. Customs warehouse, I think, could be in the region of 3 months if you're lucky. If you want to apply for AEO, I think that was advertised at 120 days. So, you know, these kinds of special procedures, it's not a knee-jerk reaction. Companies really need to sit down, look through the guidance, pick the one which is relevant for them, and then factor in how long it's going to take them to do it, what resources they'll need to do, educate themselves, educate their staffs to make sure that it's right for them.
Thanks, Dick. I hope that's helpful. Kenneth, going to just do one last poll, by the way. Again, this is a double parter. It's one of our government questions. And pick three. Oh, I won't let you pick three. I've done this one. I did. I'll pick one of these. Which of these means of support should the government utilise to help traders overcome trade barriers? Options there promote online systems of customs compliance, support due diligence on partners, help identifying recruiting staff, support staff to train in export processes, and better support to take part in trade shows. Righty-ho. One quick question on customs warehousing, then I'm going to finish off on a more broad question for both speakers. But this question is from Ryan, who asks, can customs warehousing maintain EU preferential origin for customers outside of the EU if the goods transit via a customs warehouse in the UK?
Yeah, if the goods are coming in and they remain in the process, then the VAT and import duty is in suspension, then they can maintain preferential origin. It's only once they come out of that status and they go into free circulation that the preferential origin is lost.
Oh, sorry, thanks, Nick. And then I'm just going to close that part of the question now and then launch the second part. So a few more options here. The options now are trade deal with new markets, better support in markets, so things like embassy support, consulate support, better support from UK export finance, tax break for exporters, and help with protecting IP. Right, so final question. This is for both Nick and for Aman. I'm actually going to do it as a double biller. So Andrew asked, what are the experts' forecast for global shipping over the next 3, 6, or 12 months, so kind of short term and long term? And then we had a question in from Teresa, who asked what are the next big technological advancements which are going to have an impact on supply chains? So Aman, do you want to kick off first? So initially short term and long term predictions for supply chains, and then the next big thing on tech.
Yeah, I think in the short term they'll continue to be a kind of it'll kind of be at a lower level in terms of there's quite a bit of administrative work and kind of I think businesses from the clients that we're dealing with have really delayed their preparation for Brexit, particularly due to COVID. So I think now that the requirements are becoming more and more established, that I think the volume will start to slowly pick up longer term. So as we go out to the kind of 12 months, things will normalise a little bit more, and hopefully some of the crazy kind of shipping rates will kind of become a bit more sensible compared to what they have been more recently. And in terms of technology, I think there's actually quite a lot of technology now certainly in the finance space for supply chains, and it's right through the supply chain, right from kind of distributed trade ledgers right through to using blockchain chain technology, right through to kind of electronic shipping documents, and how really the shipping and finance sectors related to supply chain are kind of bringing themselves up to kind of where they should be in terms of making them fit for purpose for the future. So I think that there's actually quite a lot of technology going into various parts of both the supply chain and how funders are now getting involved in that. But it's early days yet, and it's kind of a higher cost, and it's not kind of reached down to the practical levels yet. But there's work ongoing, particularly by a lot of the major banks out there and the credit insurers.
Really interesting. Blockchain always seems to be on the tip of everyone's tongues when it comes to these sorts of questions. Nick, anything to add? I should just to say, while Nick is answering this question, I'm going to show the results to these last two polls. But Nick, anything to add to in terms of forecasts and technology?
Yeah, a few things. I mean, as far as the global shipping is concerned, it's subjective in as much as there's a lot of things to consider, such as routing, shipping line decisions, further lockdowns, and how countries are recovering from the pandemic. Although the figures that I've seen suggest that the outlook for 2021 is strong, as we mentioned, with fewer blank sailings, and shipping companies are reporting higher profits, and they're optimistic for 2021. Regards to technology, I would say yes, as businesses turn to things, as we mentioned, like blockchain or artificial intelligence and 3D printing, and they're trying to overcome the lessons learned during this pandemic. And we've seen examples of not just compliance, but political actions such as the blocking of exports for vaccines, or the reliance of China, for example, for PPE, and just how ineffective supply chains can be if they only rely on one source of supply. So now we're seeing, companies making and taking actions like the production of Novaxa. So they're going to have that one produced in the UK, and everything will be under its own control. As I mentioned before, with regards to technology as well, more and more companies are trying to make their systems pandemic proof, as we mentioned, for the pick and pack systems and robotics as well. So yeah, it's certainly moving on. And the other thing, of course, is that companies, they can't just be looking to achieve efficient supply chains, but they also have to comply with ethical supply chains. They have to consider modern day slavery and providing full visibility and accountability. So that's even more prevalent in today's age. So in effect, they've got a lot of work. And I think some reports are showing that 50% of firms plan to increase their investment in procurement as a result of COVID-19?
Really interesting. Well, we have one over, so thank you, Nick, and thank you, Aman, for some really interesting questions. I hope you both agree, and thank you for the answers and also the presentation. So yeah, thank you both, and if you can move to the next slide. Yeah, but we're going to wrap up now. So just a reminder of some of the support from the Institute in terms of helping businesses adjust to the new normal in the world of supply chains, whether that be due to the impact of Brexit, COVID-19, or anything else. Membership with the Institute gives you a range of support, including discounts on training courses, access to our experts via our technical helpline, member-only webinars, consultancy support, and plenty more. So please do go to export.org.uk for more information. And of a final slide, just to flag that we have released, we're now providing a new Brexit support package of bespoke training for your business, which is completely fundable by new government grants worth up to £2,000. This package can go towards training, qualifications and advisory services that can be delivered in-house. And this package also includes the creation of a bespoke action plan for your business. So a really great opportunity to get effectively funded support for adjusting to post-Brexit rules. But for now, thank you once again to Aman and Nicholas. I hope you have found that useful. Sorry we slightly overran, but yeah. Always good to overrun when there's lots of content. So for now, looking forward to tuning into the next one, and goodbye, everyone. Thank you.